Luxury vintage watches, the investment landscape. Vintage watches have emerged as an exciting and promising investment category, captivating the attention of collectors and investors alike. However, investing in vintage watches requires more than just a passing interest. It demands thorough research, professional advice, and a discerning eye. In this article, we embark on a journey to explore the potential profitability of investing in vintage watches, delving into the factors that make them highly sought after and the considerations one should keep in mind before diving into this captivating market. The allure of vintage watches, a journey back in time. Vintage watches carry an enchanting aura that transcends mere timekeeping. They embody history, craftsmanship, and timeless elegance. Let's delve into what makes them so alluring. Sought-after vintage watch brands: Rolex, Patek Philippe, Longines, Omega. These iconic brands have cemented their positions as industry leaders, known for their precision, innovation, and enduring legacy. Rolex, synonymous with luxury, consistently ranks among the hottest vintage watch brands, with models like the Rolex Daytona, Submariner, and GMT Master achieving legendary status. Patek Philippe, renowned for its exceptional craftsmanship and elegance, boasts highly coveted models like the Nautilus, Calatrava, and Aquanaut, captivating collectors with their exquisite designs. Longines, with its rich history dating back to the 19th century, offers vintage timepieces that exude timeless charm and reliable movements, appealing to both collectors and investors. Omega, celebrated for its precision and association with notable figures like James Bond, presents a diverse range of vintage watches that cater to various price points and styles. Legendary status of iconic models. Timepieces like the Rolex Daytona, Patek Philippe Nautilus, Longines time-only models from the 1950s-1960s, and Omega Seamaster have transcended their functional purpose to become cultural icons and symbols of excellence. These watches embody exceptional design, technical prowess, and historical significance, capturing the imaginations of enthusiasts and driving their desirability. Scarcity, exclusivity, and craftsmanship as value drivers. The scarcity and exclusivity of vintage watches contribute significantly to their value appreciation. As time passes, finding well-preserved examples becomes increasingly challenging, amplifying their allure. Beyond scarcity, the exceptional craftsmanship invested in vintage watches elevates them to the realm of art. Meticulous attention to detail, intricate movements, and exquisite materials make them true masterpieces. Factors to consider when investing in vintage watches. While the allure of vintage watches may be enticing, investing wisely requires careful consideration and a well-informed approach. Let's explore the key factors to keep in mind. Thorough research and professional advice. Embarking on a vintage watch investment journey necessitates comprehensive research. Understanding the market trends, historical price data, and the nuances of specific brands and models is crucial. Seeking professional advice from seasoned experts and reputable dealers can provide invaluable insights and help avoid potential pitfalls. Influential factors determining watch value. Condition. A vintage watch in pristine condition, with minimal signs of wear and all original components, commands a higher value. Collectors and investors seek watches that have been well maintained and preserved. Rarity. Rarity fuels desirability. Limited production runs, discontinued models, or unique variations significantly enhance a vintage watch's value. Originality. The presence of original parts, including dials, hands, and crowns, adds authenticity and value to a vintage watch. Any alterations or modifications can diminish its desirability and investment potential. Historical significance. Vintage watches with historical importance, such as those associated with notable events, figures, or innovations, carry an inherent value that captivates collectors and drives demand. Role of documentation and service history. Comprehensive documentation, including service records, certificates of authenticity, and original receipts, instills confidence in the authenticity and provenance of a vintage watch. Service history showcases a watch's maintenance and care over the years, demonstrating its reliability and adding to its desirability. Investing in vintage watches goes beyond mere financial considerations. It's a journey that requires passion, knowledge, and discernment. Understanding the allure of vintage watches and considering factors like condition, rarity, originality, and documentation empowers investors to navigate the market confidently and potentially enjoy the rewards of their investments. In the following sections, we will delve deeper into the lessons we can learn from history, explore vintage watches as an alternative asset class, and examine recent market trends to shed light on the lucrative prospects of investing in these timeless horological treasures. The virtues of vintage watch investment. Investing in vintage luxury watches requires more than just financial acumen. It demands patience and a long-term perspective. Let's see why these qualities are crucial for success in this unique investment realm. Vintage watch investment as a long-term endeavor. Embracing vintage watch investment as a long-term endeavor is essential for maximizing potential returns. Unlike short-term investments that aim for quick profits, vintage watches are best appreciated over time. These horological treasures possess the remarkable ability to appreciate in value as the years pass, making them ideal assets for patient investors seeking substantial returns. Potential for value appreciation over time. The allure of vintage luxury watches lies in their remarkable potential for value appreciation. These timepieces embody scarcity, historical significance, and enduring appeal, which contribute to their ability to accrue value over time. As the years go by, the rarity of certain models increases, amplifying their desirability among collectors and investors. Those who hold onto their vintage watches for an extended period are likely to witness significant returns on their investments, as the market recognizes and rewards their timeless beauty. Managing expectations and understanding market fluctuations. Investing in vintage watches requires a nuanced understanding of market dynamics and the ability to manage expectations. While overall trends in the vintage watch market suggest value appreciation, individual watches may experience temporary declines or plateaus. Market fluctuations can be influenced by various factors, including economic conditions, shifts in consumer preferences, and global uncertainties. By developing a comprehensive understanding of these dynamics and adopting a long-term perspective, investors can make informed decisions and navigate the market with confidence. Recent auction results. Assessing market trends and bubbles. Recent auction results in the vintage luxury watch market have ignited discussions about the presence of a potential bubble. Let's analyze these recent developments and explore their implications for investors. The Jumbo Royal Oak by Audemars Piguet. A record-breaking example. The recent auction at Sotheby's showcased the exceptional rise in vintage watch prices, exemplified by the sale of the Jumbo Royal Oak by Audemars Piguet. This extraordinary timepiece, with a maximum estimated value of nearly €500,000, commanded a staggering price of almost €2 million. The sale of such an iconic and highly sought-after watch raises questions about the sustainability of these skyrocketing prices and whether they are indicative of a market bubble. Declining prices for certain luxury watch models. Contrasting the record-breaking sales, there have been indications of declining prices for specific luxury watch models. Economic downturns, inflationary pressures, increased interest rates, and global uncertainties have contributed to these declines. Vintage luxury watches, like any other investment, are not immune to broader market forces. Understanding the interplay between these factors and the vintage watch market is crucial for investors seeking to make informed decisions. Market factors contributing to the decline. Several market factors can influence the prices of vintage luxury watches. Economic downturns erode consumer confidence and purchasing power, leading to decreased demand and subsequent price declines. Inflation reduces the real value of assets, impacting consumers' ability to invest in luxury goods. Increased interest rates make alternative investment options more attractive, diverting funds away from the vintage watch market. Additionally, geopolitical events and shifts in consumer preferences can create market uncertainties and impact prices. Lessons from history. The 2008-09 recession. Insights for vintage watch investors. In the world of vintage watch investment, lessons from history can provide invaluable guidance. The 2008-09 recession serves as a stark reminder of the impact economic downturns can have on luxury watch prices. By examining this historical period, we can uncover essential insights that can inform our investment decisions today. Historical context and impact on luxury watch prices. During the 2008-09 recession, the luxury watch market experienced a significant downturn, resulting in a sharp decline in prices. Luxury watches, typically viewed as stable and secure investments, saw their values plummet by up to 40%. This jarring event underscored the vulnerability of even the most esteemed timepieces in the face of economic instability. Understanding the potential risks and downturns in the market. The recession highlighted the importance of comprehending the potential risks associated with investing in vintage luxury watches. Market fluctuations, economic recessions, changes in consumer sentiment, and global events can all impact the value of these timepieces. Acknowledging these risks allows investors to approach the market with a measured perspective and make informed decisions based on a thorough understanding of the broader economic landscape. Importance of diversification and a well-rounded investment strategy. One of the critical lessons gleaned from the 2008-09 recession is the importance of diversification and maintaining a well-rounded investment strategy. By diversifying their portfolios across various asset classes, including vintage watches, investors can mitigate risks and potentially offset losses during economic downturns. The ability to weather financial storms is intrinsically linked to the resilience of one's investment portfolio, making diversification a fundamental principle of sound financial planning. Vintage watches as an alternative asset class. In today's ever-evolving investment landscape, vintage watches offer a compelling alternative as an asset class. Let's explore the unique characteristics that make them a desirable investment option. Comparing vintage watches to traditional investments. Vintage watches stand in stark contrast to traditional investment options such as stocks and bonds. Unlike intangible assets subject to market volatility, vintage watches possess tangible value rooted in their craftsmanship, historical significance, and emotional appeal. This distinctiveness sets them apart and offers investors a chance to diversify their holdings beyond conventional financial instruments. Lower volatility and stability compared to other investment options. One notable advantage of vintage watches is their lower volatility compared to more traditional investment options. While financial markets may experience turbulent fluctuations, vintage watches tend to exhibit stability and retain their value even during uncertain economic times. This stability can provide investors with a sense of reassurance and confidence in the face of market volatility. Benefits of diversifying investment portfolios with vintage watches. Including vintage watches in an investment portfolio brings the advantages of diversification. By adding an alternative asset class like vintage watches, investors can reduce overall portfolio risk and potentially enhance long-term returns. Vintage watches serve as a tangible and unique investment, providing a hedge against traditional market fluctuations and an opportunity for capital appreciation over time. Vintage watches have emerged as a highly enticing and potentially lucrative investment opportunity. The allure of prestigious brands like Rolex, Patek Philippe, Longines, and Omega, with their exceptional craftsmanship and rich heritage, has captivated collectors and investors worldwide. These timepieces hold not only aesthetic appeal but also a promise of value appreciation over time. Investing in vintage watches, however, requires a careful approach. It is essential to conduct thorough research, seek professional advice, and adopt a long-term perspective. Understanding the lessons from historical events, such as the 2008-09 recession, provides valuable insights into the market dynamics and the potential risks involved. By recognizing the scarcity, craftsmanship, and historical significance of vintage watches, investors can make informed decisions. Diversification is key to mitigating risks and enhancing the stability of an investment portfolio. Vintage watches offer a unique asset class that complements traditional investments like stocks and bonds. Their tangible nature and emotional appeal make them stand out, providing an alternative avenue for wealth preservation and potential growth. In summary, vintage watches hold great allure for investors seeking to diversify their portfolios and capitalize on the potential for long-term value appreciation. By navigating the investment landscape with a keen understanding of historical lessons, recognizing the importance of diversification, and embracing the inherent qualities of vintage watches, investors can unlock the full potential of these timeless treasures as a valuable alternative asset class. For more content, don't forget to like, subscribe and hit the notification bell.